Hey, this is Matt from InvestiQuant. Today is Friday, September 10, 2021. Yesterday was a wild day in the market. We had an initial push higher that looked like it was getting a little bit trendy and then failed and then rolled over to close at the lows of the day. So we ended up with a bearish outside day. We tested up above the prior day high. We closed down below the prior day low, or right at the prior day low area after testing below the prior low. So we're going to be looking at what has happened historically following a bearish outside day when you gap up. The markets are kind of trendy price action right now in the overnight session to the upside following that weakness yesterday. So let's go ahead and set that up and discover. I've got all four instruments selected. Set up based upon entering the market long at 9:30 a.m. Eastern Time. The exit will be 4:15 p.m. Eastern Time. Currently, we are trading higher. I'm going to add that piece of information by going to the gap direction and clicking on gap up. Next, I'm going to go down to the price patterns, and I'm going to grab the candlestick pattern from the active today section. I can find candlesticks right here. Day after bearish outside day. I just clicked on that. It came from the candlestick category here. If I scroll down a little bit, you'll be able to see it there. And then next, I'm going to put us in a similar market environment. We've been selling off the all-time highs, but we're still well above 200-day simple moving average. So I'm going to add below a 10, but above a 200-day simple moving average. And now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when the prior session was a bearish outside day and you gap up the next morning. This is taking place below a 10 but above a 200-day simple moving average. Historically, we've got 55 samples in the S&P dating back to 2003. There are 61 samples in the NASDAQ, 60 in the Dow, 53 in the Russell. Win rates on them are mostly favored. So you've got the S&P coming in at 62% of these have ended up closing above the opening print with that pattern. The NASDAQ coming in at 64%, the Dow 62%, and then the Russell more neutral at 51%. So three of the four are fairly favored there with win rates in the low 60s. If we look at the average win and average loss, it's very similar in size for the S&P. The NASDAQ has a larger average loss compared to its average win, as does the Dow and the Russell. So the average losses are a little bit bigger on the downside as a whole, but the win rates are favored to the upside as a whole. So more often than not, these instruments have went higher the next session from the open, but when they move lower, the moves lower have been larger than the moves higher. So hopefully you found that helpful. Good luck today, and we will see you next time.